Hello, Heather here, Rental Property U. Today we're doing a super fun session on reporting, financial reporting. And and I mean that. I really do. I'm always trying to think how to make this stuff fun. So first of all, I wore fun jewelry. I hope that's fun. And also, it's fun to talk about money. It's fun to talk about numbers. It's fun to talk about your financial success. It's fun to measure, okay, what you manage. And this is what it is, guys. Now, I think a lot of people have a lot of preconceived notions around reading financial reports and thinking it's hard and overwhelming. Now, not all of you, but some of you. And I was one of them. I was one of those people that had the lies, even though I have a finance degree and I love math, but I don't love accounting. You see, I love finance. It is different. I like finance because it's creative and I love to be creative. And it's like the art of money, where bookkeeping and accounting is auditing and it's specific. I know there's creativity in it for sure, for sure, for sure. But I just love spreadsheets and creating pro formas for the future and building a vision around the finance and using math to do that and using equations and compound interest and fun, I think they're fun things like that to shape the financial opportunity of the future of whatever you're doing and working on. Whereas accounting is kind of like what happened. Maybe the accounting, the bookkeeping is the history, okay? Where finance is more like the visionary, the visionary people are maybe more in the finance piece. And then, you've got your historians that are in the accounting bookkeeping piece where they want to know what happened. Okay. But I find that a lot of people, including myself for many years of my life, and sometimes even in the present, sometimes it depends on how busy I get. But I will say, my best years are the years that I'm not in the defensive position and not playing the defense when it comes to doing my bookkeeping and accounting, reading my reports once I get them from my bookkeeper, or if I'm doing the bookkeeping and accounting, reading my own reports. Like I'm doing the bookkeeping for our apartments right now, and I just finished through the end of June, and I sent it to my business partner, and he said, "Well, how do the reports look?" And I said, "Oh, I didn't even read them. I just did the accounting and sent them." So that it's still like I'll still have some of those habits, right? Where I should absolutely look at the report, especially if I did it. Don't I want to see if I got it right, wrong? Because you remember, obviously, you just did all the accounting, and you want to see if it's a good check and balance. Number one, number two, it's like the finished product. I just spent all this work doing the data entry. Wouldn't I want to see the fruit of that in a tangible PDF format, in a quantifiable way of all this mess, this disorganization, and I brought it together in an organized way, in a clean, understandable format that absolutely holds a language to it, and it would be a really prudent thing for me to look at that report, right, before I send it out, for sure. But I didn't, because I'm just going to tell you how I run things, and I want you to know the truth, because I think a big part of my mission is removing the veil. I'm not going to pretend like I do everything right or know everything, because I don't. Nobody does. Anybody come. But I mean, I just want you to know how this really works for someone that actually does this, not only as a business helping people like you and clients, because I'm a broker, a real estate broker in Texas, but as a rental property investor that's been at this for 20 years. This is the real. This is the person that is in this book. This is I am this person. You are probably one of the case study archetypes in here, one of the case studies. And that's just the reality. We're not billionaires. We don't have large operations. It's me sitting in my museum of things that weren't until they were office, and doing it on a MacBook laptop with paper and pen, and drinking my coffee from home. And that's the truth. That's the truth for normal people like me and probably you. And this is just how it looks. You're just getting it done. You're weaving, you're moving and you're shaking. You got a lot of things going on. You got an adventurous life. You're fun. You're exciting. You're moving. You're doing it. You're shaking. You're learning. You're moving forward. Okay, but it's just like however it gets done, it gets done. And the goal is you're just constantly learning so you can move forward. And some years you're gonna have more on your plate, and some years you're gonna have less on your plate, and some years you're gonna just not want to do it. In other years, you're going to be super on top of it, and that's okay. What if you just had twins? I mean, you're just going to want to probably get by on this stuff because you probably have a lot going on. Okay, and that's okay. It's just the commitment to the migration of becoming an elephant. See, this pathway is the migration. Elephants move slow, but they get where they're going, right? So that's the thing, guys. You should want to stay on TRACK. You want to stay on track. Okay? You don't want to give up. So you're just going to like constantly iterate and pivot as you build your financial reports, as you build your understanding of financial reports, as you do your bookkeeping. So this is not just a talking video today. Oh no. We are going to share the screen. And I've prepared some screenshots for you to look at. Some of this stuff is my stuff that I actually use. Some of it's stuff I've taken from the internet because I didn't want my personal information on there. You can understand, right? You can understand because of the internet, So some of it I've just found on Google Images and stuff like that. But I'm going to try to break this down as best I can. The number one goal, and this is a 101 level, okay? The number one goal is don't get overwhelmed. And just take it slow. And if you have to listen to this and re-listen to this and re-listen to this, it's okay. I listen to things on repeat a lot because I don't understand it. And then I just re-listen. And you don't have to listen to the whole thing. Just listen to the part you need to learn. But this is not meant to be done overnight. Again, and we're not doing rocket science. I'm not trying to build this up like we're curing cancer here. We're not. But I truly have learned over the years, people find this stuff overwhelming because they don't understand how to be a business owner, and they don't know the vernacular and the language. And even my super, intelligent, like high net worth clients, just this isn't the language they speak because they live in W-2 world. And this is about becoming a business owner. This isn't about buying a property. This is about being a business owner. That's the goal of this business. If you're just going to be an investor, go buy the S&P 500 stock and call it a day. I'm not kidding, and I'm not trying to be rude or mean or whatever you want to call us. I'm just telling you, it's a lot of work to do this thing. And if you're not going to if you're not on the ideology to go for the gold here, to like really go for it, don't do it. It's too much work. It's too stressful. There's not enough cash flow in it in the 2026 and beyond game of rental property investing. It's not about cash flow anymore. That's old news. Old news. Gone. The internet changed that. How long has the internet been around for mass people? Like since 2004? The first MLS I saw was in 2004, Ebby.com. Shout out. You guys really led the game there. Zillow came about. I remember very clearly seeing it in 2006. My business partner at the time, Sarah, was already blogging and using Google keyword searches in 2006. She came from San Francisco, so, they know things quicker up there than the rest of us. But she started blogging in 2005, actually. But yeah, so we are 22 years into the internet, like being a thing in real estate. So that means that the same person in China can see the property you're looking at, and the same person in Egypt, in London, in Italy, and Minnesota, in New York City, in Miami, in Chicago, in Ontario, in Mexico City, in Argentina, and Spain. Shout out winning the World Cup, guys. Congratulations. And thanks for coming to America. We loved it, by the way, so much. But it's like, look, look, that changed the game. Let's be honest. Before the internet, cash flow was a thing because demand and supply were much different than they are today. It wasn't a thing like it is today. So cash flow's old news, fake news, gone. It's over. For the most part, I'm not saying you can't get cash flow. I'm not saying that. I have one client, Deb, that I used as a muse when I was writing this book, and she just bought a rental in Colorado in 2024, and she's getting great cash flow. So I'm not saying that, but for the most of us, for the hundreds of my clients, it's not about cash flow. For me, it wasn't about cash flow for years. My job, my income is my cash flow. This is a game of building a business. You want to unlock the US tax code to offset your income tax because you're not a W-2 consumer anymore, filing only a 1040 1040 return, writing things off in your Schedule C. You are a business owner with a partnership return, okay? And you're writing things off on a separate return that funnels through to your 1040 return. And that's the game you're in. And you want to set up an active, properly structured business. Those are the key activating terms. Think of it like this. A seed is just a seed, right? Powerful seed, powerful intelligence in a seed. Let's say we're growing broccoli. Delicious, delicious broccoli, healthy, yummy, cruciferous, delicious broccoli. And this seed is nothing in and of itself. It will never be broccoli. It won't have really any, I guess maybe it could have some kind of, it's a store of value. It is a store of value, but it's not anything until you activate it. How do you activate a seed? You know the answer. How do you activate a seed and take it from seed to broccoli? How? Tell me. Tell me. I'm waiting. Tell me. That's right. You need sunlight, water, and dirt, right? Those three things. Sunlight, water, dirt. And then, maybe the fourth thing, time. Let's just be honest. That's absolutely an element to this seed becoming broccoli. So you're going to activate that seed. And when you activate that seed, it becomes something else, right? That is active, properly structured, setting up an LLC, a business for your rental property business. That's what that is. That activates the opportunity for the stuff underneath the iceberg of the rental property business that you cannot access until you do that part, until you water, sunlight, dirt, and time. That's setting up a business. That's what you're doing. Rental property itself is the seed. Setting up the LLC is the activation of that seed to unlock tax strategy and your mindset as becoming an investor and becoming an entrepreneur and then doing all kinds of asset layering and trusts and getting ahead of your bookkeeping and your financial reporting and getting out of the defense position and getting in the offense position, which is a great segue. And off we go to the first financial report and statement, you can call it that too, of the 2.5 that we're going to talk about today. Okay? And why a half? I'll get to that in a minute. Okay, dear friend, let's check it out. Balance sheet is number one. What is the balance sheet? A financial statement that reports a company's assets, liabilities, and shareholder equity at a specific point in time. So I'm just going to kind of let you sit on that for a second so you can read the definition on your own and try to lock it in. Okay. To define an asset, they're valuable resources you own, usually something that has value to someone else that you could absolutely sell. Okay. Your clothes are probably not assets unless you have designer stuff, but even then, it's probably worth a lot less than you think. Liabilities are debts you owe, any kind of debt you owe, okay? Any debt you owe. Even if you had the handshake deal of saying, I'll pay you XYZ, but you didn't really intend to, write that down because that's your integrity. And that's important as you grow into becoming a rental property investor business owner. Okay. And I want you to notice they use a word here, shareholder equity, because equity is used in a lot of different ways. There's home equity, like what the value of your home is that you have, also known as net worth in your home, also known as, well, those are the two main things. But shareholder equity is like if you own a business and you make an investment into that business, it's held on the books until you get that back, right? Because when you build a business, like I've invested money into building Rental Property University, okay? But I haven't received a return on my shareholder investment yet. So it holds a place on my balance sheet as equity. So I'm aware that I've spent the money out of cash or out of another investment where it would have been held on my assets, which let me just hop on this one and show you what I'm talking about. This is a blank template that I'm going to show you, but now it sits on my balance sheet because I need to keep track of it. It's not like I spent the money. If I spend it, that's called an expense, which we're going to get to that in a minute. Potentially gone, but well, usually gone. But equity is a company investment that I've made that I am absolutely expecting a return on. Okay, this is my actual personal financial statement, also known as a balance sheet, also known as my net worth, okay? Now, I want to say that a lot of times when companies build balance sheets, see, there's kind of two pathways here. When you're building a balance sheet just for your company, okay? So let's say you open up, you buy one rental property, and then you make an LLC. Okay, that LLC, let's say you call it Iced Coffee LLC. All right, so usually you're going to run a balance sheet just for that company. You don't have to. I want to be clear on that. I didn't run a balance sheet. I mean, for my company, for my rental property investing company, probably until actually probably 10 years ago, because I did use QuickBooks, and in QuickBooks you can run a report that's a balance sheet, so it actually wasn't that hard. But don't get lost in this, okay? Today on this video, we're not going to go into running a company LLC. We're going to talk about running a personal financial statement, a PSF, your household balance sheet, your net worth for your family. Okay, that is because I want to include everything, because we're normal people. And if you just have one or two or three rental properties, you're just learning, and it's just too overwhelming, I think, for most people to separate it. Now, if you're at a level where you can just run it separate, do it. But honestly, even then, it's still going to always flow to your personal financial statement, because you are a person. You are one person, always a human, no matter how many entities you make. You're still a person, and everything flows to you. So these reports are just a way to organize all that, okay? And you can get as detailed and layered and organized as you can or want. This stuff is deep. It's a fun game of never-ending learning. However, if we're 101 or 102 level folks, you have one or two rentals and you're W-2 and you never owned a business before, and it's all new to you, let's just keep it simple. And let's just do one for now, and then you can grow from there. There's no right or wrong way to do it. It's your personal journey. And if you have nothing, then start here. So one way to do it is just use a spreadsheet. And I'm going to show you, I'm not going to share this template, but I am going to show you where to get a great template here in a minute. So don't worry, my dear friends, I got you. So what you're going to do is you're going to say, like, as you can see, this is the way I did mine. This is a template. You've got your assets over here on the left, and you've got your liabilities over here on the right. Okay, now you can get as granular as you want. I'm going to walk you through how I would go about organizing it in a second on a new one. But it's going to take your assets, which is in this green one, minus your total liabilities equals your net worth. That's how it works. And when you fill out, what your real estate is worth, okay, you can separate them out individually, or you can combine them all up and put them in one amount here. That's how I do it, because on this particular one, I have a projection that helps me see like cash flow, expenses and stuff. I like to project and kind of understand a little bit. So this part's integrated in mine. And then I have, I go here and I fill out my bank accounts. So I go in all my bank accounts and I put the specifics of my bank accounts, which totals up here, which then funnels over here into the checking. Okay. And then the stocks and bonds, same thing. If I have specific stocks and bonds, then I'm going to put that information here. And then that also flows back up to the top. Notes receivable is like if somebody owes me money. Life insurance and annuities, deferred compensation and retirement plans, that's where your IRAs, your Roth IRAs, your 401ks, your SEP IRAs would go. And then you're going to have notes payable, that's mortgages, etc. Okay. And then your real estate owned and your partnerships. So again, this is me, this is your loans here. And this is, this part is your loans. Sorry. This part is your loans for your specific real estate. So I can itemize it out a little bit better. And then this is my partial owned real estate, okay, that I own with partners. If you have any oil and gas interest, and then you can lay out a little bit more. I don't ever fill this out. I don't even know what that is. And then here you can lay out if your businesses and your percentage businesses, okay? And then as you can see, if you go down to the bottom here, I do this about twice a year. Okay. So I always like to do it in the summer and then in December, because December is the month when I kind of do a lot of audits. Actually, not kind of, always do a lot of audits in December. But I always like to do it in the middle of the year, and I find myself a lot kind of doing it around July 4th-ish. But as you can see, if you look at the bottom, I've done this, all the way back. This spreadsheet started in 2019. Before that, I started doing this in 2017. But I would do those kind of individual documents, individual spreadsheets. And then I just adopted where I would just copy the latest one and then make a new tab and then date it. And then I would just do it like that. That way I could see, oh, no, I don't want to show you my stuff. That way I could see doing it on, like basically, I don't know, it just helped me to see it at a glance, All right, so that's kind of that. But if you want to know how to do your own, just go here to, what you're going to do, I found this one with QuickBooks because I use QuickBooks a lot. I love QuickBooks. Shout out QuickBooks. Love you. Big fan, been using QuickBooks since probably 2008 on and off, and for a variety of ways and different businesses and different plans and all, always. I've never used desktop. I've always used QuickBooks Online. I'm just a huge fan. I'm going to show you a little bit more about it when we get into the profit and loss, which is statement number 2. But I found that they have a balance sheet template, okay, that we're going to work with here and do a little session together. I forgot to share the top. Okay, so QuickBooks, this is what the page is going to look like. And the way you're going to find this page is you're just going to Google, I'm on Chrome, I don't know if that matters, but you're just going to Google QuickBooks desktop balance sheet template reporting accounting. You could do it like that, or just remove these 2 words, because I just looked up how they indexed the hyperlink, and that was the keywords they used. And it's this one right here. It's not this first one. It's not in the sponsored. It shows up as the first, link in the Google search. Balance sheet template and reporting is what you're going to click on. Okay, and then that. Oh my gosh, I forgot. Goose. I'm such a goose. All right, there we go. So I told you QuickBooks desktop balance sheet template, okay? And then you're gonna click on this, and then that's what takes you to this, okay? So if you scroll down a little bit, you're gonna hit this tab right here, balance sheet template, okay? Balance sheet template. And that's gonna open a CSV file for you, okay? And then I take the CSV file and then I put it in a Google Doc, okay? A Google spreadsheet, okay? So this is what theirs looks like, okay? And as you can see, they have current period, prior period, and then increase or decrease. You can keep that there, Or if you want to just do what I did, you can start the new tabs, like I said. So this one would be, whatever. Oh my gosh. Sorry, my thing was a little hidden there. Let's say 7/30/26. Okay. And then you can once we I would say we can edit this first to get the names in that we want, and then we can make a copy. And then I would show you how I would do this. So you can decide how you want to do it. I'm just going to walk you through and kind of show you how I would do it. Okay. So enter your company name here. Iced. Whoopsies. No, actually, I take that back. Remember, this is our personal financial statement, right? So maybe you would say the name of your family, okay? All right. And then you would say the date, which again, I'm probably just going to do that down here. Or honestly, it might not be a bad idea for redundancy. So I would say date, and I would say 7. Yeah, that way I can just have a little redundancy there, okay? And then you really don't need, that. Again, you can decide how you want to label it. It's not a big deal, just whatever works for you. Now, I'm not going to have the start end date because I'm just doing it as of right now, okay? So I would say, okay, current assets. So cash, petty cash. If you don't have petty cash, that just means cash is probably in the bank, right? And if you have multiple bank accounts, let's say you have cash, however you name your accounts, okay? Personal, checking. And then let's say you're married, okay? You'd be personal checking John, personal checking Emily, okay? And then it might be cash, personal savings John, and then same thing, personal savings Emily, okay, whatever. If you have a decent amount of cash at home, fine. What's a decent amount? I would say 3,000 or more, maybe even 2,000 or more. Fine, put it down there. If you don't have that, just don't worry about it, okay? But then again, if 500 is a lot to you, put it down, okay? I don't know your spending habits. I don't know all that, but whatever. If you have, who am I to say? Where's the limit? You decide. If you want to put petty cash or whatever cash you have on you, put it in there. Then you have accounts receivable. That's money coming to you. Let's say you have someone owes you money, and that's legit. Okay. I mean, we all kind of have those stories where we think the money's coming back, but it ain't coming back. It might need to be a write-off and you move on. But if you really do have accounts receivable, put them there. Now, I would lay out what that means, loan from Rob, okay? If you have inventory, again, probably not. This is a business term. You probably don't have inventory as your personal financial statement. But again, if you do, put that there. Prepaid expenses, maybe you've maybe you're renting a home where you live and you've paid the whole year in front for whatever reason. You could put that there, but I don't know if I would because the money's already gone, essentially. Employee advances. See, these are all kind of business terms. I would just remove that, okay? And then I would add other things like what other investments? Let's say you have some silver. Let's say you have some money in the stock market, or let's say, and then that fund is Fidelity Fund. Okay. Let's say you do some crypto stuff. All right. Let's put that there. Crypto. Okay. And then you're going to put that there. All right. And then if you have any other current assets, I wouldn't get too complicated on this. I'd probably just remove that and put that there. Okay. And then and then you're going to have your fixed assets. I would not separate land and building. I would just call it rental property 1, rental property 2, etc. And as you can see, Spelling is important. And then, primary home. Okay. I would, you don't have that. Okay. Vehicle. And I would put like, Ford, whatever, what's a Ford? F-150. And I might put like, Chevy Malibu, whatever. Okay. And then anything else that you might have. All right. There you might put back up here too. I don't know how you want to organize this. Again, you just want to kind of get it in there and then you can organize it as you go. But you might want to do like 401k John, right? 401k Emily. You might want to do Roth IRA John, whatever. Okay, you just want to kind of organize it out. Think through. It's not going to be that hard for you. You just need to put it on, get it out of your head and put it somewhere. And then you're going to add all those values here. Okay, how are you going to find the value of your real estate? Well, here's an easy way to do it. So I'll give you a general idea. Go to Zillow. Okay, go to Zillow and see. And if you know Zillow's wrong, estimate what you think and subtract at least 10%. I'm serious. That's how I do it. I'm conservative. Plus, you're going to have closing costs. If you ever sell, and that's just realistic, you want to really not overshoot this stuff. This is true and honest work. This is not about creating an ego. This is not about a bragging right. This is about like, what are you worth? So then you can have an understanding and then build from it. Most people never, ever, ever do this in their entire life. Most people never teach their children this in their entire life. Most people don't even know how to do it. And I'm just telling you, if you do this one exercise, you've probably done more than most people, like of your peers. I would say 80% of your peers. Yeah, and if you just commit to this one thing, your financial literacy, your financial confidence is going to grow immensely. And then you're going to add up what are the total assets. Then you're going to go over here. So other assets, trademarks, patents, security deposits, probably going to get rid of that. Unless you're holding the security deposit, fine, put it there. And I would also remove the total fixed assets and I would just put assets. Okay, what are my total assets? Again, we're going to keep this real simple. And then we're going to go to liabilities, right? And then I would remove current liabilities and all this garbage. You don't need all this, guys. It's just too much. It's too overwhelming. All right, so we're going to say, okay, accounts payable. That would probably be credit card. All right, so we're going to say credit card. Let's say you have a Chase. Let's say you have a Best Buy credit card. Okay, hopefully that's all you have. Sales tax payable, I'm not sure I'd even put that down. You're not going to have really payroll probably, but you might. You might have payroll liability because one of the key things, here's a pro tip. Here's a pro tip. If you've activated your broccoli seed, AKA activated your rental property and set it up as an active, properly structured business, then you might have access to payroll of your kiddos. It sinks. Okay, so let me just tell you that, hey, you might have a payroll liability for your kiddos. But again, you don't have to worry about that. You don't have to worry about that if that feels overwhelming. This is a game you're going to play for a long time. And the more you play the game, the better you get. And the more you add in and the more strategy you build. And the only way to do that is you play the game. So then you're going to say notes payable. Again, you probably don't really have any, well, we're going to lay that out. We're going to say mortgage payable, but we're going to do like rental property 1, mortgage rental property 2, mortgage. And then we're just going to say, let's say you have 3 properties. And if you don't, no shame, condemnation, or guilt. It's your race, you against you. All right. And then you're going to go, let's say you got your home. Primary home mortgage. Okay. And then what you're going to do is if you have other debts, let's say both your cars are paid off. Bravo. Don't go buy a new car. If that's true, take the money, invest it in your business. And then let's say you just have your mortgages. What a good life. Yeah. And a few credit cards, cheap credit cards. And then equity. So this is where we were talking earlier about your company equity, your equity investment in your company. You don't really, I mean, one thing you could put here is what are called capital improvements on your property, because that's not a down payment. Technically your closing costs could go here technically, because if you want to keep track of those, you could probably put that here. Okay. Because again, you're looking to get that back, right? So you could say that, capital improvements are like once you buy the property, let's say you had to put 20,000 in it to renovate it. Well, where are you going to hold that value? So you don't forget in 20 years when you sell, what did you really make? Well, you could hold it here on your balance sheet. You've invested that. It's an investment in the property. It's not an expense. It's an investment. So that could be an equity potential. Okay. Closing costs, same thing. If you paid 15 grand for closing costs. Now, yes, some of those are expenses, but if you hold the property long enough, you're going to make that back. And when we analyze all of our properties, we're always getting a return on the capital improvements and closing costs in our calculator. Again, if you're not doing that, don't worry about it. We didn't do that for years. It's fine. But if you really want to know the real numbers now that you're a business owner and you're dialing in on these numbers, then you'll want to know that. Okay. So you could say, what are the total liabilities in equity? Okay. And then what's your balance sheet? Balance sheet check. Let's see. I don't know what that means, but we're just going to call it that. So then you're going to add all these up, and then you're going to say assets minus liability equals net worth. And now that I'm thinking about that, yeah, liabilities and equity. Right. Okay. Oh, I don't know. Anyway, I don't hold equity on my balance sheet. I'm just going to be honest. Okay. You don't have to. So many ways to do this, guys. And we're all like, again, there's no right way. There's no wrong way. Even if there was a right way, you're never going to get that message out to the whole world. So the key to getting ahead is getting started. So just start. Just start. You didn't see equity on my balance sheet, did you? And I'm doing just fine. So I would delete these columns here. And then I would, now that I've got my template ready, then I would just say, let's see, I would just copy this, right? And then copy to existing spreadsheet. Oh no. What in the hecky pooies? Duplicate. That's what I wanted. Yeah. And then I might call this template. Okay. And then I would scoot this over there, and then I would go and I would work on this one and start adding in the numbers. Okay. Okay, so there's your balance sheet. And then here's another idea on the balance sheet. Here's another idea. Let me just stop that puppy for a second. And let me show you guys. 40 minutes. Okay, you guys okay? 40-minute check-in. You can do it. Come on, let's rock and roll. We're business owners. We're business owners. We push through. We finish what we start, don't we? So if you just want to do like this, if you just want to do this, do this. Do this. If you just want to do this, do this. Write it in a book. This is just my journal. Okay, I always work in a journal. And then this is the second page. Okay. Look, this is the second page. If you just want to do that. It's okay. This is your version 1. You're building a business. Look, this thing, not version 1, right? Does a lot more than version 1. Version 1 is great, but look, they've improved, they've pivoted, they've adopted. I think this is a 15 or whatever. The new ones are 16. 16 versions later, you see, they couldn't have built 16 until they did 1, right? Apple, Steve Jobs couldn't have done it. So he has to start in order to grow. The key to getting ahead is getting started, and you got to pivot your mind. Okay, you're becoming an elephant. All right. So if you're a lone wolf, you're not. I mean, it's not going to be a good time. Get out of the mind and get over here and become an elephant and get into this thinking and just begin. That's all you got to do. It's that simple. It's that simple. Like if you read one book on rental property investing, just one, that's more than I ever read when I started. I never read one book ever. I didn't even read my first business book until 2011 on the flight to Australia. on my flight to Australia, and I read The Millionaire Mind by Thomas Stanley, which I talk about in this book as the first business book I read. And I'm telling you, that was not easy to read, that thing. That took me a long time, but I started investing in '06, so I didn't even read my first book until 4 years in, and it wasn't even about rental property investing. So if you read one book, you already know more than 99% of the people that are doing it. It's that easy, but that information is so hidden, and that's the truth. So I just want to help you know that if you just make a balance sheet, even if you, one time I made one on a napkin and I sneezed in it and then I lost it. So I would not advise that. But my point is, that's who's the expert. I'm the expert, apparently. And that's just whatever it takes to just do it and commit and grow. Okay. Nothing's wrong. You just have to do it. All right. Financial report number 2. P&L, the profit and loss statement. Let's check it out. Okay, this puppy is, oh, by the way, shout out to Investopedia. I use your definitions all the time, and I have for a very long time. A very long time when it comes to teaching and my own knowledge, and I appreciate these little cards that you make, and I just love them, and I'm so thankful. So thank you, Investopedia.com. All right, so profit and loss. P&L, also known as a P&L. It stands for a financial statement that outlines a company's revenue, which is income, costs, which we're going to get to what those are in a minute, and expenses over a specific period of time. Let me define what that is. So all expenses are costs, but not all costs are expenses. A cost is buying land, purchasing a factory machine, or buying office computers, because those are going to live on your balance sheet because they're not expenses. Because they depreciate and they're stores of value, and they just live on a different report. Expenses are paying monthly office rent, utility bills, employee wages, advertising. Okay. The expenses you have in running your business. Oh, I forgot to share that. All expenses are costs, but not all costs are expenses. And this is your cost examples and your expense examples that I just read. All right. So that's what that is. We're going to go to, and so like I mentioned, the cost side and the expense side. So when you buy property, okay, that's not an expense because that lives in stores on your balance sheet, right? As your asset minus your liability, which your down payment and stuff is going to live there, okay, on your net worth piece, because you've taken it out of one asset class and put it into another asset class, which is your rental property. But this closing disclosure, you're going to get that when you close on the property, or you have one if you already did. It used to be called a HUD 1, HUD-1. It's closing disclosure. It's been that way at least 5 years. You're going to, probably longer. Yeah, it's before COVID it did that. But anyway, you're going to, you would give this to your tax attorney, okay? By the way, if you're still using TurboTax, that season's over, friend. I'm just going to give you the PSA. The TurboTax season is over if you want to take your rental property investing business seriously. You're not saving any money, I can almost assure you. You think you are, but you're not. You're leaving actually a lot of money on the table if your income tax is your highest expense. And I bet it is, because if you're a normal person like me or you and you're a W-2, chances are it is. So you don't know what you don't know. That's the truth. It's just how it goes. You don't know what you don't know. I didn't know what I didn't know. There's many other topics in my life that I don't know what I don't know. My sister taught me a lot about health and plant-based eating and whole foods and nutrition this weekend that I didn't know. I just didn't know. I was blown away by what she knows and what she taught me. And I didn't know what I didn't know. I had false information. I had inaccurate information. I had bad intel. I was leaving a lot of reality on the table because I wasn't willing to step into the truth. And she had the truth, and she invested that into me, and I listened, And therefore now I have the truth. And now I know immensely more than I did 7 days ago before I went and visited her in Florida. That's the truth. And you will find in this business, rental property investing business, the real gold in this, not buying the house, it's building the business. You will find that there are a lot of things that you don't know. Okay, so don't get overwhelmed by that, but accept that truth. That's how elephants think. That's how foxes think, which is the animals in becoming an elephant. My chair is falling again. One second. Okay, here's the deal I'm going to make with you guys. As soon as I monetize this video, one of the first expenses is, well, first expense, Ian and I are going to buy Michael Jordan jerseys and take a picture in front of the Michael Jordan picture in my office that I've painted. The second expense I'll buy is a new office chair. So, hey, can you help me reach those two goals, please? Please, please, please. By either buying Becoming an Elephant on Amazon, maybe more than one copy to give out for Christmas, or I don't know how you could donate money. That would be really nice. But nonetheless, I'll do that with the money as it comes in. But you want to migrate into an elephant mindset out of a lone wolf or a fox, which is a fox is on their way to becoming an elephant. However, sometimes they get lost, but they have all the traits. So you give the closing statement to your tax attorney because you're not doing TurboTax anymore. That season's over, and you're pivoting. TurboTax is a QuickBooks product, but you're going to pivot into another of their products, which is QuickBooks. Okay, that's what professionals do. You're a professional now. It's not a cost, QuickBooks. Yes, it is, or an expense. Yes, it is, but it's really an investment. You got to shift your mind and you got to say, okay, instead of spending, 4 times a month on Starbucks, which by the way, breakfast now there can cost you like $15. It's ridiculous. It's ridiculous. It's ridiculous. It's ridiculous. But if you just didn't do that, and maybe you just did an audit on some of your random spending on your iTunes or App Store or subscriptions or whatever, you'd probably find the money. I'm pretty sure you could. And then you just invest in QuickBooks. Okay, do it. It's going to change your life, and it's changed mine. It just makes you a better business owner. It makes you take it seriously. And it's a great tool. I just can't tell enough about it. I'm a big fan, always have been, always will be. And I've looked at a lot of other accounting platforms, and I always just find QuickBooks to be the best. They do a great job building great software. And here's the thing. So you're going to take your closing disclosure. You're going to give it to your tax attorney. You can work with a CPA, yes, but they need to be really well versed in the tax code. A lot of times and I'm not poo-pooing on CPAs. I just want to make that clear. We only can really give our own testimonies of our own experience. I just know for me, my life changed when I started working with a tax attorney financially, and that was in 2014. I always worked with CPAs before then, and I just wasn't able to accelerate it the way I could until I started working with a tax attorney. So that's all I'm going to say on that. You decide what you think is best for you. Some CPAs are great and they're just as versed as tax attorneys, but tax attorneys are literally lawyers that specialize in the tax law, tax code, IRS tax code, okay? Accountants specialize in generally accepted accounting principles. So they know stuff, but it's just different. It's like a doctor, I think, going to a general practitioner versus a specialist. Sometimes the general practitioner is great and it does what it needs to do. Sometimes you need a specialist. You get to decide. And if you do one thing today and you change your mind tomorrow, it's okay. It's called a pivot, and we do it all the time as business owners. You give the closing disclosure to your tax attorney or CPA. They're going to put it on your balance sheet because in a way, because they're going to document where your starting point was. All right. And that also sets the depreciation schedule if you do a standard depreciation schedule, which is 27 and a half years. That's the standard IRS. But here's another thing. You can do cost segregation. So we're going to talk about that in another video. But that's a really great tool to, again, offset income tax and reduce taxable liability, which puts more money in your pocket, which allows you to pay mortgages off or scale your portfolio. Now, yes, we have to pay that back. Yeah, some of it. I don't even know how that works really, but there is some depreciation recapture is what it's called. But again, it depends on your goals. Not everything is a one size fits all for everyone. It's a very specific individual, personalized thing. These are just tools. You don't always, if you go to Home Depot and you look in the tools section, how many tools are there? and then look at your own toolkit at home. How much tools do you have? And how much do you need? I mean, some of us, we have a specialization, we have a hobby, we like to do woodworking, we really enjoy building things, we have a building background, our dad built, we want to continue on the legacy. We just have a knack for that. Like, we want a lot of tools. We're gadget people. Other people are like fine with the basic stuff. You know, it's not wrong. Everyone is just different. So you give your closing, I keep going off on these tangents. I hope they're not harmful. But you're just going to give this closing disclosure to your tax attorney or your CPA, and they're going to figure it out. But that's where that stuff goes. It doesn't go in your P&L, okay? So if you want to kind of see how reports get run in QuickBooks, which you can use QuickBooks to do your bookkeeping for your P&L, and that can be also for your property, your business, your LLC. So even if your business has one property in it, you can still have QuickBooks for the one property. And as you grow, you can still use one QuickBooks account for the entire LLC. Let's say you have 4 properties in the LLC. For rental properties. Well, you can use something called classes, which we're going to get to in a minute, and you can run each individual P&L. I love classes. I'm a huge fan. I'll show you what that means. But this is like a YouTube video called How to Build Reports in QuickBooks Online Advanced. And it's Intuit QuickBooks is the page right from their YouTube channel. So you can go here, check it out, watch this little video. It's about 5 minutes long if you kind of want to see how they run reports. If you don't want to use QuickBooks right now, oh, I forgot to, damn it. All right. I'm sorry, Lord. I didn't mean to. Okay. So this is the little YouTube, but if you don't want to use QuickBooks right now for your P&L, profit and loss, you can just use a spreadsheet. Same thing. Use a spreadsheet. All right. No big deal. And then you're going to pivot into getting QuickBooks a little bit later, but here's how the reports look. Okay. I think I might have a little. I pulled a spreadsheet. Let me see. But anyway, this is an example. Thank you, Rock Castle Construction, because they did these and put these online. Anyway, this is a P&L for the whole year, January through December. Okay. So once you run everything in your QuickBooks, see how these have what are called sub-accounts. So this is your main income, construction income. And then they have a lot of sub-accounts. See their sub-accounts, or actually it's one of their main incomes. I guess they have a second main income called reimbursement income. And then they have some sub-accounts, okay? And then that's going to be their total income. And then they're going to have cost of goods sold. Okay, total income. Yeah, some companies separate that. You won't need that for rental property investing, okay? And then they're going to have their expenses, and then they're going to have their subcategories, okay? And I'll show you what that looks like in a basic format here in a minute. You can also run your P&L by each month, okay, January, February, March, April, May, June, and show you a month at a glance, right, for your gross profit, and then eventually you're going to see your net profit for each month within the year. And then you can run it by classes. So as you can see on this is them saying, okay, we have different expenses that we want to put in different buckets so we can see what each category costs us on a project. So new construction, remodel, overhead, unclassified. So for your rental property investment portfolio, Iced Coffee LLC, you'd have, property 1. So you'd have 112 Element Street. Property 2 would be like 456 Pickup Stick Street. Property 3 would be like 997 Owl Street. And then property 4, if you had 4 properties, would be like 215 Jesus Street. Okay. And then you would see each property individually laid out, and you could run it. You could see the P&L on each individual property. That's your class. Now, if you want to do classes, let me just run you over to QuickBooks real quick, because you're going to need to do the plus. You have to do the plus, or you could do advanced, but you really don't need that one if you're just got a few rental properties. You can always change these. You can always go up, go down. It's okay. They always have some kind of deal going on. I've never not seen them have some kind of deal. Sometimes you can call them and they can even give you a better deal. Maybe. Sometimes they can, sometimes they won't. It just depends. It's worth a phone call. I've worked with them since 2008, so I've seen a lot of things over the years. So you get the plus, right? And then, because here, if you go down here to the bottom, it says, oh my. This is not my strong suit. Let me go back to this Rockport construction because I don't think I changed any of these tabs. I am so sorry. That's why I really need someone to help me. So if anybody knows, could be like, I don't even know who does this, but anybody that knows how to do this could help me do this. That would be great. This is the profit and loss by month. And this was the profit and loss by classes that I was talking about. I'm really sorry about that. I was saying each one of these columns would be, so each one of these columns would be the properties, okay? The property name, and then it would show you an individual P&L, and then the total, of course, for your whole portfolio, okay? And then on QuickBooks, you're going to go to QuickBooks Online, you go to small business, and then it takes you to this little page that shows you their offerings. So for classes, you have to get the plus. And then as you can see, if you scroll down to what it includes, you're going to track classes and locations. Classes is the thing you want. Okay. All right. So that's that. If you just did a spreadsheet, which is what this is just a rental property profit and loss template. This is from template.net. You could just go there and get it. I'm sure this has a cost, I think, but you could find one online for free. I have one, but anyway, maybe we'll get around to finding a way to sharing it with everyone. I would love to. We're just not there yet. So just doing the best I can to get the information out. But here's it just kind of takes it each month. Okay. This is the columns of the month. And then these are, again, those same expenses. Okay. Similar expenses for, income and all that. So let me show you what if you just want to do a level one, same thing as like your balance sheet, just put it in your little journal. And then you can just write it just like this. Look, just like this. See, no big deal. No big deal. You just want to get it down. Okay. This is just for your property. Now I hope I'm not confusing you also, because we were talking about household balance sheets, household, personal financial statements. And now we're talking about doing a property income statement. Now, because the way that it's written off on your business return, usually it's itemized per property because each property is typically depreciated. And then you have your interest expense that needs to be booked. Just those expenses need to be booked to those individual properties. And that's how it's on your business return. But you're going to also have additional expenses that are going to be written off like through another P&L. So I just make a spreadsheet for like additional business expenses that I incur running my rental property business that I can't book specifically to the property, because I like to keep direct income and direct expenses to the property so I can see how the property is performing within my rental property business. But I have additional expenses running my rental property and business, like the cost of my tax attorney, like the cost of QuickBooks, like the expense, I'm using the word cost, like the expense of publishing my book, like the expense of running my office, right? That my office write-off, like the expense of travel when I need to travel for my business, which every time I travel, potentially it could be for my business. I'm self-employed. I'm an entrepreneur priming the pump of the United States economy. I am not just a consumer, W-2 employee. I'm an entrepreneur. I'm building ideas. I'm creating vision. I'm priming. I'm moving. I'm hiring people. You are doing the same thing, even with one property. When it's active and properly structured, when it comes from a seed and you're growing broccoli now. You got me? Are you picking up what I'm putting down, dear friend? I hope you are. I'm just having fun with this today. All right, now we're going to get on to the half report. And that's the cash flow statement. That's the cash flow statement. Now, I'm going to be honest, I never have used this statement in my life. I never have. Okay. Investopedia, our friends over there, say a financial statement that aggregates a company's cash inflows and outflows from operations, investing, and financing over a set period of time. It's a little different from an income statement. What I would define this statement as is you kind of want to see, especially as a small business, like when are your incomes and expenses coming in and coming out to make sure you're not going to have cash flow problems. Right? Because you're not going to collect your rent until like sometimes the 8th or the 10th of the month. Okay. Maybe even the 12th or the 15th. It depends on how your property manager does accounting. It depends on if you're managing it. It depends on how you're collecting rent. It just depends on a few different things. Maybe your tenant always pays late. I don't know, but that works for you, and it could. But you just want to like know where your income's in it. So you can pay your mortgage up to the 15th of the month. Almost, I mean, look at your deed of trust. It'll tell you on that. But that is almost always to be true. So if you need to move your payment date back on your mortgage, if it's coming in the first, out of your account on the first, and you're not getting rent until the 8th, just move it to the 9th or the 10th or the 12th. It's okay. That's a business owner. You see, we're kind of evolving a little bit here. We don't have to front the money to our business to cover the cash flow deficit. Just shift your payment schedules around and make it work for you. Same with like your credit card bills. If your credit card bill's due on XYZ date, a lot of times it's as easy enough to go online in your account and change it. If that doesn't happen for your bank or your credit card, call them up. Tell them you need to change it. It might take a month or two. Usually they will. And then same thing like how you pay your property taxes. If you're going to pay those at the end of the year because you don't escrow, then you need to make sure you got the money. So it's about to be August here, and well, I guess everywhere. But you're gonna just start saving the money. You're gonna start making sure you have enough money to cover that when the bill's due in December. Now it's not late until the end of January. But you know, I just always advise paying in December so you can get it in your fiscal accounting year. But if you're in a bind, yes, move it out. But hopefully not. Just get up great reporting and accounting practices and get in the offensive position, and you can get ahead of it. Okay. You're a business owner now. So if you were quote unquote bad with money in your personal life, you're a business owner now. So you need to start a new identity. Start a new identity, just like I did when I wrote my book. I'm not Heather Anderson anymore. I'm Heather Lane Anderson. I have a new identity. I'm an author now. I do hard things. I finish what I start. I commit to working on projects alone and by myself, and when nobody makes me, and when I'm not sure how it's going to even work or be successful or be promoted or whatever, it doesn't matter. That's the identity I've adopted now. Even making this video took me well over an hour just to get organized. That's my identity now. I wouldn't have probably done that 2 or 3 years ago, because I didn't have that identity. I didn't have that. I don't know. I'm much more willing to do things that I feel a little more tedious about, because I have a vision that I know I want to achieve, and therefore I'm driven to work toward it. So that's what this stuff helps you do. You're a business owner now. Business owners read reports. Business owners pay attention to bookkeeping and accounting. Business owners hire the right people that know what they're doing. That's becoming an elephant, my dear friend, which an elephant is a millionaire. That's a millionaire. That's somebody that has $1 million of net worth or more in their rental property investing portfolio or real estate portfolio. That's a millionaire. We're only talking about the first million. That's who I'm talking to right now, is building the first million through rental property investing. That's it. And we're going to do it with only 4 properties. And your acquisition pace is somewhere between 5 and 10 years for most people. You can do it earlier, but you know, it depends on how much money you make. It depends on how many tools you want to utilize. It depends on how motivated you are. It's a lot of variables, but that's just who we're dealing with. Okay. And so when you're doing your cash flow, so you're looking at your cash flow, another way, so you're just kind of eyeballing it, and maybe you're moving things around, and maybe that's as far as you want to go with with this half report that I want you to pay attention to, this cash flow statement. Or maybe you want to take it a step further, and you want to get your bank statements. And a bank statement is a document that is typically sent by a bank to an account holder every month, summarizing all the transactions of an account during the month. So, you know, we all know what most of us know what a bank statement is. And if you're not getting that via email or via post, go into your bank account, log in. You can definitely get the CSV file. This isn't what a bank statement kind of looks like. Had a hard time finding an example of them online. But again, thanks to Investopedia for the defining what it is. And you can go into your bank account. You can log in, go to accounts, select the bank account you want, select the date ranger statement period, and then click export as a CSV file, okay? Which stands for, well, I don't know what that stands for, comma something. But and then from there, then you can Command A, which usually copies the whole spreadsheet, or Control A, I think for PC. Copy and then paste, open up a Google Doc or a spreadsheet, Microsoft spreadsheet, copy it, and then start working in it. And then you can organize things like that. You can just take a look at it and see what are the dates things are coming in, what are the dates things are coming out, and then you just kind of want to be aware. You want to be active in your business, right? Because what you put into it is what you get out of it. And that's just true. That's a principle of life. That is a law. That's a law in this world that we live in, this any world anybody's ever lived in. You get out of it what you put into it. So this is no different. Okay. And if this is overwhelming, watch the video again, buy the book, go on our channel. I've made 150 videos, long form and short form. I've created an e-course. We have a website. We are a real business, Rental Property U. This was a 20-year vision for me. This is a labor of love. This is a passion. I just want to help the next generation of rental property investors do it better, faster, stronger, with more peace and joy than I had when I was doing it. It was not an easy migration for me, but it can be for you. It can be for you, and it can be fun, which is my number one core value in doing all of this, is to have fun. So do all that. Or if you really don't want to do it, if you're at a place where you really just want to hire someone, you can hire me and I'll help you do all this, and I'll tell you what to do and how to do it and help you dig in and get dirty with you and connect you with my partners. But yes, there's an expense for that because every business has to make money, right? And a lot of the stuff I do for free, like this video and even the book, it's almost free. I mean, it's a few dollars, $20 or whatever. So it's like, that book took me 3 years to write and thousands of dollars to make. So it's a labor of love in doing that book. So but if you want to hire me, I can help you. But if you don't, that's okay too. Watch this video again and again and again. And then go to other videos like JJ the CPA, who is a CPA, but he's a business guy CPA. If you want to learn about tax attorneys, Google, go to YouTube and look up, rental property investing tax attorneys or rental property investing tax strategy, things like that. You can wet your whistle like that. And there's just a lot of pathways, and directions you could go. Look up cost segregation, see if that's a pathway for you. If you want to do acquisitions, we have referral partnerships in many market areas. But again, you've got to be willing and able, and you've got to be able to be qualified. Okay, gotta get the money. You got to have the right part. Who's the authority in the transaction? Those people need to be aware and in agreement. You got to have realistic goals. You can't be a goldfish here. I mean, you can, but it's going to be really hard for you. Okay. Hope this helps. It's my honor to walk you through this today, the 2.5 financial reports of rental property investing. And I just bless you, and I bless your day. And I hope this time made you better than when you arrived in this video. That's my true intention. And I hope we met the goal. Until next time, dear friend, keep having fun. And we're going to enjoy the migration of becoming an elephant together.